Central bank 25 basis points. The guests on the streets, they're only going to raise it 25 basis points. If they raise it 25 basis points, we're forecasting gold is going to skyrocket way above $2,000 an ounce. Because that means they're putting more cheap money in there. They want to keep it going. If they raise it 50 basis points, gold prices are going to go down, and so are the markets, and so is the global economy. If they raise them 50 basis points, gold's going to go down, but only for a short time, because it's going to be an economic disaster. They're money junkies. They need their monetary method down.
I'm wondering how you see the gold price evolving as real yields keep climbing and the dollar keeps climbing as well.
In this industry, you have to be optimistic. And so perhaps a bit of my optimism will come out, but it is underpinned by what I think is a sanguine view. If we look at gold today and say it's at a low point that we haven't seen since 2020, then we have to go back perhaps to 2015, 2016, and see what the gold price was, and then how did it...
Beginning to see the end of dollar strength, because the stronger that China gets and the more the BRICS unite against the United States, and they've had enough of the United States hegemony, both in terms of war and in terms of owning too much with too little.
It's very difficult to predict gold price over a short period of time, even over the course of months and quarters. But I think directionally, gold price continues to be strong and get stronger. I am not surprised that gold price is in the 1600s, that it has fallen from the levels that it was at. The US dollar has definitely shown strength and resilience. But equally, I think that directionally, gold price will find a base and then will start to establish upside again. And where I think that really resonates for me, and I'm sure that the World Gold Council sees it as well, is Asian buying. If we look at these levels, we begin to see that there's strong support coming from countries like India. China has been in COVID restrictions for a very long period of time. As they come out of those COVID restrictions, I think that buying begins to manifest itself, and we'll begin to see strong gold prices again.
Economic activity in China expanded sharply for the second straight month. And manufacturing rose at its fastest pace in more than a decade in February. So is this going to keep up? Well, yes and no. The International Monetary Fund, Mafia Federation Monetary Fund, in January upgraded the growth forecast from up to 5.2% in 2023. But there's a lot of ifs. But there's no question about it that it's going to do better than a lot of the other economies.
Central banks bought records amount of gold in the third quarter of 2022, numbers we haven't seen in decades. We still don't know what China's buying, but they revealed that they're buying some. No one really believes the numbers. That's a different story. What do central banks know that we don't know?
What they know is how they're going to rig it, and we don't know when they're going to do it and how they're going to do it. But again, as I was saying, why would you keep your money in a bank when they're not paying you anything and they're making money on your money? To us, gold is the number one safe haven asset. When gold went down into the 1600s a few months ago, we said this is the bottom, it's going up from now. And now it's been hitting, several month highs. Again, when they go digital, gold is going to go through the roof, because that's going to be the only real currency that's going to be accepted to pay, to transfer, because they're going to do away with all the paper money. So the stronger China gets, the more the yuan's going to go up and the more the dollar is going to fall. The dollar is right now at a crisis point. It's only staying high because of high interest rates, but they're going to come down at some point, and so too will the dollar.
Now, Investing 101 tells us that in a year of high inflation, gold should do really well, and this has perplexed many people why gold hasn't been the top performing asset class this year. But the reason, of course, has been that because central banks have acted so aggressively, what should have been smooth sailing for gold became the perfect storm for gold this year. You know, rising US dollar and rising treasury yields become headwinds for gold. But next year, this could change because some of the strength in US dollar could come off if we start to see that peak of hawkishness from the Fed, treasury yields if they come off, and if economic data starts to deteriorate while inflation is still fairly high. These are sort of Goldilocks conditions for gold, perfect conditions for gold. And what's even more interesting is every gold rally, if you like, has a silver lining, i.e., whenever gold shines, silver outshines it. We saw it in 2020, 2021. So we may see a lot of investors expressing their bullish view on gold via silver as well next year.
The two things they don't want to happen. They don't want the equity markets to crash, and they don't want gold prices to skyrocket to where they should go, because then the little people will know how bad it is. They don't know how bad it is until the markets crash. Gold prices should have been skyrocketing for the last 3 years.
Why would they care? Why would they want to shield that reality from the little people of knowing how bad it is? They've done it in the past, in the 90s.
Well, again, not like now, because the crisis that we're facing now is unprecedented. Unprecedented. The countless trillions of dollars that they've pumped into the economies around the world. Around the world. You're going to see, it's the new world disorder. You're looking at the emerging markets. Why is the dollar strong? The dollar's strong because all the other ones are so weak. Again, listen to the crap that's spewed out of the mouths of the central bankers. And now the European Union aggressively raised interest rates from minus 0.50 basis points to 0 interest rates. What, are you kidding me? What do they got? An 8.6% inflation rate? And the IMF I mentioned before? If you borrow money from the IMF, they tell you to raise your interest rates 1% above inflation, which means that our interest rates should be, 10.1%? Europe should be 9.6%. Look at the data coming out of Germany. The biggest, richest country down. Everything